Hello everyone, my name is David Flacco. The company our team is working on is Australia, and I am part of Team 2. I will be focusing on legal system. So I want to start off by analyzing the system and giving a brief overview of the government. So the Australian government is a parliamentary democracy. It was first established in 1901 as a federal system of government, and it works just like the US. The powers are distributed between the national government and its 6 states. And also like the US, it has 3 branches that have control, which is the legislative, executive, and judicial powers. And pretty much they all have a separation of powers, to keep it short. And within the judiciary, there's a high court, which is the highest court in the country. So from a business standpoint, a business in Australia functions as a natural person or the same rights as an individual. In the US, we are used to operating in a system where there's large businesses versus the individual. In Australia, all laws handed down directly affect both company businesses as they would the individual. It's more of an equal representation as opposed to the United States. We have different regulations for companies as opposed to individuals. It's treated differently.
Hi, my name is Marilena Bañuelos, and I'm going to talk about national culture of Australia. As we know, national culture is one of the factors that are attributed to accounting diversity worldwide. Hofstede identified 4 cultural dimensions that affect them, and later on a 5th one was identified as well. Australia and the United States have pretty similar scores on all of them, and this can be attributed to the fact that they're both part of the Anglo-Saxon group of countries, as well as the United Kingdom, New Zealand, and Canada. Australia has a low power distance. In a professional setting, this means that auditors are more free to report whatever they find, either positive or negative news, because they don't fear repercussion as much as people who live in a high power distance country would. Australia is also individualistic, so it gives more emphasis on individual goals instead of like a company goals. This can be seen with a higher turnover, and then also with a temptation of like tweak numbers to have a better public image. Australia is also masculine, so they just give more importance to masculine values such as independence and leadership instead of feminine values. This makes sense with the other scores, since the exertion of those masculine values usually lead to an individualistic behavior. Later on, Gray identified 4 accounting values, and then the book provided a table. And if we use the scores that we had on the Hofstede cultural dimensions, we can learn that Australia has a very high level of professionalism and a low level on all uniformity, conservatism, and secrecy.
Taxes in Australia are administered and collected by the Australian Tax Office, and in some cases, state government revenue offices. The 2 statutes under which income tax is calculated are the Income Tax Act of 1936 and Income Tax Assessment Act of 1997. Companies that have been established and reside in Australia are subject to an Australian income tax on the worldwide income. An Australian resident company is subject to a company tax at a rate set by the Australian government. Non-resident or external companies are subject to Australian income tax on Australian sourced income only. A non-resident company is taxed on its Australian source of income at the same rate as a resident tax. Taxable income and the tax rate may vary under limited circumstances, such as industry or business structure. If a company is a resident in a country with which Australia has determined a double taxation agreement, Australia's right to tax business profits is generally limited to profits attributable to a permanent establishment in Australia. There are no separate branch profit taxes. A company or corporate tax is paid on profits and or assets. Companies' taxes are calculated at a flat rate of 30% unless they're a small business, which ranges between 25 and 27%. Taxes are paid on corporate income on the corporate level before they are distributed to shareholders as a dividend. A tax credit, which is also called a franking credit, is available to resident shareholders who receive dividends to reflect tax already paid at the corporate level, which is called a dividend imputation. Business taxes that a company may be required to pay are company or corporate tax, taxes for goods or services, capital gains tax, and they always have an option of pay as you go, which is an option to make monthly, quarterly, or annually payments. Some companies in Australia will also be required to have a payroll tax. Australian goods and services revenues collected by the federal government and then paid to the states under a distributable formula determined by the Commonwealth grants. Capital gains tax applies to any capital gain made through disposal of assets. It is paid as part of the income tax. Foreign entities may be subject to this capital gains tax on assets acquired and used in the continuation of a business in Australia, and records must be kept.
That's Michelle Lopez. And the reason we talked about Australia's legal system, culture, and taxation is because all of these factors influence the accounting system used in the country. For Australia's accounting system, it can be best described as a fair presentation and full disclosure model, which is also known as the Anglo-Saxon, Anglo-American model used in English-speaking countries with influence from the United States or the UK, like Australia. It can also be classified as a Class A accounting system, which is found in countries with strong equity outside and shareholder financing. So their measurement practices are less conservative, disclosure is extensive, and accounting practice differs from tax rules. Australian companies report under the Australian Generally Accepted Accounting Principles and is overseen by the Australian Accounting Standards Board, which is in charge of developing, issuing, and maintaining Australian accounting standards and related pronouncements. Going into the Novice Judgmental Classification of Financial Reporting Systems, Australia falls under the micro-based class, with a business practice more pragmatic of British origin under the family of the UK influence.
So the company I chose was Wesfarmers. A brief overview of the company. They were founded in 1954, and they have a variety of businesses that include fertilizing and energy, safety products, industrial, chemicals, and other retail companies. Wesfarmers reported a total of $4 billion of finished goods inventory and $30 million of raw materials. So the company utilized the average weighted method. A difference that I saw in this company as opposed to US GAAP is that LIFO was not permitted, so weighted was a method that they used. Another difference was that there was $3 million of net reversal calculated for expenses related to inventory write-offs. Reversals are not permitted under US GAAP, but are permitted for IFRS. And I believe that's extremely important in regards to differences between IFRS and US GAAP. And another difference that I found in the company was how they recognize revenue. So the company incurred a total of $27,818 billion. And this revenue was from contracts with customers especially. And this revenue was generated through its retail operations, but through its sales of fertilizers and chemicals. And the difference with this is that the revenue recognition was recognized when control of goods services is shifted to the buyer. A lot of times here in the US, revenue recognition depends on industries, but for IFRS, that is not allowed. That is not a focus. And for sustainability report, it is not mandatory for Australian companies. So that's also, it's similar to the US, that it's not mandatory, but Wesfarmers still reports sustainability. And an important fact is that Wesfarmers created a new sustainability website that includes initiatives, goals, and statistics involving sustainability of the company.
Bank, which is Australia's first and oldest bank. It provides services for personal, business, and corporate banking throughout New Zealand, Australia, and in the Pacific region as well. Every year, they have a reporting center for its shareholders, which includes an annual report, a sustainability report, and a Form 20F. All of these are audited by PricewaterhouseCoopers. The Form 20F is required by the SEC, for all foreign companies that want to be listed on the New York Stock Exchange. All of these companies' financial statements are based on Australian accounting standards, but are also compliant with IFRS. The income statement for Westpac has a translation from Australian dollars to United States dollars. This is not required, this is just a commodity for the reader. And they use the exchange rate that is valid on September 30th, 2019, and like every year. So, because that is the date of their end of their financial year. They also provide a voluntary sustainability report, but this one, it's not translated to United States dollars, it stays in Australian dollars only.
Qantas is Australia's largest airline and has become the third oldest airline in the world. Qantas was founded in Winton, Queensland on November 16, 1920. It is also nicknamed the Flying Kangaroo. It operates domestic, international, and regional air transportation services, freight services, and has a loyalty program. It employs over 30,000 people. It operates predominantly in Australia, New Zealand, and Asia, but also has a large presence in Africa, the Americas, Europe, and the United Kingdom. Its headquarters are now in Mascot, Wales. It is on the Securities and Exchange Commission, as well as the Australian Securities Exchange Commission. Qantas emphasizes on becoming the leader in the airline industry. Its main focus is on safety first, how it manages airplanes that are suitable within its destinations, customer service, operational effectiveness, environmental responsibility, and creating strong brands for the reputation as Qantas and Jetstar. In 1999, Qantas became a founding member of the One World Air Alliance. Qantas has aligned itself with strong international partners such as Emirates, American Airlines, and China, and its loyalty program continues to expand with new partnerships, and it's integral to retaining customer loyalty for its core airline business.
Analysis, I chose the National Australia Bank, which was founded in 1834 and it's currently headquartered in Melbourne, Australia. Their portfolio includes Australian banking, wealth management, and New Zealand banking. If you go under their website, they have a shareholder center with financial disclosures and reporting. The annual reporting suite includes the annual review, the annual financial report, a sustainability report, and a corporate governance statement. The 2019 annual financial report includes a statement that the report contains information prepared on the basis of the Banking Act of 1959, the Corporations Act of 2001, and it is further prepared using accounting standards and interpretations issued by the Australian Accounting Standards Board, the International Financial Reporting Standards, and interpretations issued by the International Accounting Standards Board. Another thing I wanted to note is that they are audited by one of the Big Four, Ernst & Young, which provides an audit assurance for their shareholders and potential investors. Their annual financial report includes an auditor's independence declaration, financial statements and income statement, statements of comprehensive income, balance sheets, cash flows, and shareholders' equity, but they also include notes to these financial statements to further explain consolidated totals and any other information they want to provide to shareholders. The sustainability report explains how they are engaging shareholders to manage environmental, social, and governance themes to create value to the community and environment in which they operate. The NAB's report is an example of a full disclosure, fair presentation accounting model whose purpose is to present stakeholders and potential investors with the company's well-being and audit assurance.